want to learn how to manage your own investments? Are you ready to stop paying investment management fees and start building wealth? The DIY Investing Podcast is dedicated to providing you with the knowledge, skills, and resources you need to be a better investor. Learn how to make investments through the use of fundamental analysis, mental models, and business management insights. Now, here's your host, value investing expert, Trey Henninger.
Hello and welcome to episode 11 of the DIY Investing Podcast. My name is Trey Henninger and I'm your host. Today is a non-standard special episode. I'm going to discuss the launch of my new Patreon campaign and membership program. This program is designed to provide listener support to the show and the other avenues that I'm using to provide investing content to listeners. My goal here is to go through the reasoning for why I'm starting a Patreon program and what I'm looking to get out of it. If this doesn't sound like something you would ever be interested in, or if you simply just want to listen to additional investing content, you should just skip right on ahead to the next episode or wait for the next episode, because I'm going to focus today purely on discussing my reasons for starting this membership program with Patreon, what the benefits are that I will be providing from the program, and how I plan to involve it in the overall arc of what I'm doing with DIY investing. So let me dive straight in. The first key point is that I really want to produce a podcast that's listener supported. The number one way that you monetize podcasts these days is by using advertisements. And I generally feel that we all listen to a lot of advertisements all the time, and we're constantly being marketed to out in the world to buy things. And as an investing podcast, as a podcast in the overall personal finance space, I really care about presenting a cohesive, straightforward message. And what that really means is that I don't want to be sending mixed messages in what I'm doing and what I'm saying. And what I'm saying is I'm trying to provide content that helps you build wealth, that helps you be successful in life. And that means that I'm trying to provide you with the tools and resources you need to become a successful investor and to become wealthy. And if you want to build wealth, you need to manage your expenses. You need to understand when you're spending money, how that ties into your overall wealth building journey. And you need to understand, what you're doing on a daily basis, which really means you need to be in control of yourself and control of your spending. One of the key things that prevents people from being in control of their spending are advertisements. For anyone who has watched any of Mad Men, the TV show, it's all about an ad agency and how their whole goal is to essentially manipulate people into buying things that they may or may not need, and essentially making people feel that they need something that's truly a want. And so when I think about advertisements, it presents a slight conflict of interest if I were to bring ads on the show that at the very least are anything but helping you become more successful and more wealthy in your life. So if I were to bring ads on the show, they would have to be things that I believed had a huge benefit towards helping you be more successful. Because I don't want to bring advertising on just to make money, because that would be a conflict of interest for me from what I feel this show is meant to do. And I don't want to have this podcast only to grow it and then make money by selling you advertisements and selling you that need and desire to buy things that you don't need. So really my focus at the end of the day is all on this idea of finding a way to be listener supported and have you be my customer instead of the advertising marketing agencies being my customer. I'm not trying to serve them, you as an audience, and have that be my product. My product is not the audience given to a marketer. My product needs to be, I want it to be, this investing content that I'm providing to you. You, my listener, are my customer, and your feedback and your well-being should be the interest of the content that I'm producing. And so I really need some way to, when I monetize this content and when I find a way to support the costs of producing this show, to have that align with my goals and values. And when I think about my goals for myself is to produce content that's helpful, and I value being, clear, conscious, and align what I'm doing without the conflict of interest. And so with that said, I've decided that one way I can do that is just to make this a listener support, so that if you want to support what I'm doing, if you find value in the content that I'm producing in this podcast or in the content that I'm producing on my website or on YouTube, that you can support me into continuing doing that. There are ongoing costs that I incur every month to produce this show, and those costs thus far and going forward, at least for a long period of time, I expect to be coming straight out of my pocket, because what I feel it is important for me to produce content that I wish I had when I was learning to invest. And I feel like it's important to produce helpful content that's going to help people become wealthier and help people make smart financial decisions, smart investing decisions, because there's a lot of information out there in the mainstream that doesn't do that. My experience has been is that mainstream media outside of the podcasting space really focuses on driving sales, driving clicks, having you buy specific investment products that people are getting kickbacks on, buying specific things that may or may not be in your best interest. And that's not the kind of show that I want to create. That's not the type of content I want to create, because that's the type of content that I had to consume when I was trying to learn to invest. It's the type of content that I had to learn to filter out when I was working to become a better investor. And I'm still working to become a better investor each and every day. And really my goal with this podcast is to record my learnings as I go through this process. I'm not a final expert. I don't know everything there is to know about investing. I have learned a lot in the years that I have been investing my own money, but I have plenty more to learn. As I look forward, there's thousands and thousands and thousands more hours for me to put into learning investing, gaining experience, and I want to share my learnings with you along the way, and I want to do that in a way that aligns what I'm doing as an investor with what I'm doing as a podcaster, with helping you be successful. So really what that means to me is that when I sit down and am producing this content, I'm looking to have partners in this journey with me. So I'm still going through the journey of learning to be a better investor. I don't manage a major hedge fund. I'm not managing mutual funds. I'm managing my own personal money. I'm putting my own personal money on the line to prove that the things that I am doing, to prove that the things that I am talking to you about work. And the risk is aligned because I am taking the personal risk with my money. I'm taking the personal risk that when I invest in a certain way and say, this is how I believe it's best for me to invest my money, it's something that's going to be honest and straightforward and transparent with you about that's what I'm doing. And so I think Patreon and the program that they have set up that allows listeners to connect with content producers like myself and support them directly and bypass the advertising and marketing medium is very helpful, because it means that when I'm producing content, all I have to worry about is what makes you happy and what makes you better, more successful, and what helps you gain value in your life. So if I'm producing content that helps you build wealth, that helps you become a better investor, that helps you earn a premium on your time when you're putting your time into studying investments, then I can be successful directly, because by doing that, I build that trust with you, and I build the direct benefit to you for the work that I'm doing, instead of saying, well, I need to provide benefit to you, and by providing benefit to you, you're going to listen to my podcasts, and if you listen to my podcasts, I can sell advertising time, and then by selling advertising time, I earn money. Well, that's a lot of intermediate steps that I want to cut out, and I just want to say, if I provide you value, then by doing that directly, maybe I'll get direct benefit back in return that can allow me to support continuing to do this in the future. Because what I've learned about myself over the past couple of years, as I've started sharing my investing journey through a podcast, but first through a blog, and now also doing YouTube videos, is that I really like teaching and helping people learn, and I like providing educational content, especially in the finance and investing space. This is one of my passions. I'm really passionate on helping people become better investors and to take the same journey that I'm taking, because I've felt alone sometimes in the type of interest I've had in becoming an investor. And there's not a lot of people in my personal life where, investing is their hobby. A lot of times, in personal interactions, investing as a hobby is seen as very different, sometimes weird, sometimes nerdy, depending upon how you ask. And what this means is that I know there are other people out there like me, and I know that there are people who will benefit from the investing content and the insight and the research that I have done, and the insight that I can provide on how to filter out all the noise in mainstream media on investing. And I believe that that can be valuable to you as a listener, because I think that I can connect directly with you. And if you're listening to me now, and if you've been listening to, my first 10 podcast episodes as I've just been getting started, then you're most likely to be someone kind of like me. You find investing to be interesting either as a hobby, or maybe you work professionally with investing, or maybe you just think you want to find a way to make your money grow. But either way, by using this podcast medium, I'm able to connect directly with you in a way that I'm not able to connect on investing with people that are closer to me in my daily life, because investing isn't seen as the same way to them as it is seen to maybe you or I. So as I thought about Patreon, and, it was really trying to think, okay, what can I create that's going to bring value to my listeners? What's going to create that is going to be helpful? Because even though I want to find a way to have financial support for this show where I don't need to bring on advertisers, and I want to find a way to cover the expenses of the money and time that I'm putting into this program on a regular basis, I don't want to do this simply as a one-way street where I'm getting just these donations to help me get started and to keep going. Although I will hugely value donations and hugely value all of your support, both moral, financial, just the comments and emails to really help me keep going, I think the key for me is that I want to make sure that I'm providing value in return, because if I have a situation where I'm receiving financial support from my listeners, from my blog readers, then I want to provide a financial return on that money to those people. I want to provide value well in excess of the money that I'm receiving in order to help you, my listener, become wealthier and more successful, because that's the end of my goal. I don't want to set up again another conflict of interest whereby setting up this membership program with Patreon, I'm making it harder for you to achieve your goals. Instead, what I want is that if you listen to my program, that you will learn educational resources and tools that are going to help you be more successful and they're going to help you build wealth. And I want that to be true if you just listen to my program and you never support me in any way financially and you never purchase any of my products. And I want it to be true if you purchase some of my products and if you choose to join the membership program that I'm in the process of setting up. Because what I want is that no matter how much time or money you're contributing in, no matter how much time and money that you are, really putting forth into investing and into the DIY investing community, that you receive a return on that. Because what we're really thinking about investing is when you put forth time and or money to receive more time and or money in the future. And so I not only need to align my interests with not being distracted with advertisers, but I want to align my interests in providing you more value than you're giving to me if you join the membership program. So with that said, let me give a brief overview of Patreon for those who aren't aware of what Patreon is. Patreon is a website that is similar to Kickstarter or Indiegogo, where listeners can connect directly with creators. And what creators do is on a site like Kickstarter, they would produce a program, say, hey, I have this big project I want to work on. Anyone who wants to see this happen, if you'll contribute $5 or $10, when this big project is completed, then you'll get, X benefit. You'll get a copy of my CD that I've written, or you'll get a copy of the music, or you'll get a copy of the book I've written. And Kickstarter and Indiegogo are really for these big projects where you contribute once and you get one benefit at the end. But Patreon is different. What Patreon is it's for creators to connect with their listeners, their viewers, their readers. But instead of for one big project, it's for ongoing efforts, ongoing support, ongoing creative endeavors. And that's really what this podcast and this DIY investing journey that I'm on is about. It's about creating an ongoing track record of my journey to become a better investor. And I hope that by being just a couple years ahead of you as a listener, by being a little bit further ahead in my journey, I will be able to provide a touch point for you at each point in the process as you grow from a beginning investor to an intermediate investor to an advanced investor, because you'll be able to see the journey I have taken. You'll be able to see and connect with the insights that I am providing, and you'll be able to take those steps forward in your investing journey yourself, because I've laid out a good path for you to take. So what that means in terms of Patreon is set up as a monthly membership program. And basically, you choose some donation level, whether it be $5 a month, $10 a month, and you set that up. And then when you do, that money will be taken out of your account every month and paid as a donation to me in order to continue to do what I'm doing right now, to be able to provide good podcasting content, good blog content, good investing resources and education to help you become a better investor. And by making it as an ongoing program set up on a monthly basis, it's able to support continued effort and resources that I dedicate to this on a monthly ongoing basis. Versus what I'm doing is not a one-time thing. I am not producing a single investing course. I'm not producing a single piece of investing research. What I'm doing is trying to create this compendium of investing guides for the DIY investor, not for the super professional investor, not for someone who is a beginner just on personal finance, but I'm looking to provide all the resources a DIY investor needs, someone who is handling their own investments, someone who is maybe working with a financial advisor, but just wants to understand more about investing, how it works, and how to make sure that they don't get screwed and that they get a good deal with their investments and that their money grows for them and it doesn't just sit there, so that when they reach retirement, they can be successful. They can enjoy a happy retirement. They can be financially independent. And so that's really what I'm seeking here with this program. And Patreon's a website that allows me to do that. Basically, Patreon is just simply like a payment processor and connector, a platform to connect you with myself and to handle that transfer and really to set up the basic outlines of this program. So if you want to become one of my patrons, if you want to join this membership program, you can just go to DIYinvesting.org/patron. That's PATRON. So that's DIYinvesting.org/PATRON, patron. And if you go to that website, it's going to forward you to a link to where I've described all the different benefits that I've set forth and dedicated time to give you an additional benefit if you decide to support me in this endeavor. And really what my goal is again, to be more than just a simple, taking a donation and producing this podcast. What I really want you to do is what I really want to do is to give you extra content, extra insight into my personal investing process to make it even easier for you to become a better investor yourself. Because really what I want to see in my program everything that I would have wanted for myself when I was learning. Because like I said at the beginning of this podcast, there was a lot of noise and a lot of junk that I had to filter to through in mainstream media when I was trying to learn to become a better investor. I had to find blogs similar to my own that could help me to learn things. I had to find resources that sorted through this junk and made everything hard to understand. And after doing that, I realized that what we really need is a key resource for DIY investors to learn from. And for me, that really involves in, this podcast producing general education and resources, talking about, the principles that make someone a successful investor, talking about the ideas and the methods and the tactics and the strategies that you need to use in investing to be successful. What my membership program does, though, is it takes us up one notch more. And really what I'm saying is that, I'm going to continue to produce my podcasting content for free. I'm going to continue to produce all of my blogging and my videos and my podcasting content and focus on, producing the central content that I've already been producing, all of this educational resource, and produce that for free with the hope that it helps people who cannot afford any sort of money and just trying to get started on their journey. But I want to produce additional value for those that are willing to support me in creating that additional content. And that additional value is really going to focus on individual companies, individual investments, because there's all sorts of talk out there in the world about macroeconomic things, what's going on in the news. You have tariffs with the president, tariffs with China, tariffs with Europe. You have what's going on with oil prices, what's going on with the dollar. Is there going to be a recession? Is the stock market too high, too expensive, too low? What's going to happen with these mutual funds? What I really want to focus on, though, is none of that stuff with the membership program. The point of the membership program is to help you make specific investments better. So all of this free content that I'm providing on this show, all of the free content I provide on the blog and the YouTube channel is designed as education and resources with the focus of general knowledge, general tactics, general strategies. What I want to dive into even more, and I'm going to continue to do some of this as free content, but build additional value in the membership program, is to dive into these individual investments. How do you make an individual investment profitable? How do you make buying Apple stock a profitable investment? When should you buy Apple stock? When should you sell Apple stock? What makes it a good investment? What makes it a bad investment? What are the things you need to look out for? What are the things that should eliminate you from considering an idea? And I want to dive into these individual company problems, individual company solutions that really drive your total return as an investor, because I think this is where I see a gap in the general investing education out there. And I think that this additional value can provide you with the value that you need to see supporting me as an investment of its own. And so that's how I've structured the membership program, is to really focus on what are the key aspects of the investment process that new or young or intermediate DIY investors will struggle with. What are the things that, as a DIY investor, you really just need to know, that you really need to get over this hump in order to start making more successful investments? And I've narrowed it down to a few different things. Again, you can find more information on all this at DIYinvesting.org/patron. That's DIYinvesting.org/patron. So I want to discuss some of the benefits that I've laid out here that I think are going to be helpful to you as a listener when you're making your individual investments. So there's multiple tiers at which you can contribute as a listener to join the membership program that I've set up. And the first tier is what I call a quality investor, and it's at a $5 contribution level each month. So for less than half of a Netflix subscription, you're going to gain access to my personal research on individual companies and analyzing their individual business qualities. And the reason I focused on this is because the first thing you need to do when determining whether a company is worth investing in is determine whether it is a high quality or a low quality investment, or even if it's a speculation, which means you really shouldn't be considering it as a core investment at all. And so what I've done is I have a spreadsheet available that this is all the companies that I'm looking at on a regular basis. I'm going to record whether I consider them a high quality investment, a low quality investment, average business. Are they an excellent business? Or is this maybe a generational business, a business that once you buy this company, you never want to sell that company again? And so there's all sorts of different categories that businesses can fall into in terms of quality, and you really need to try and buy the highest quality companies you can. Now, you're not always going to be able to, but this spreadsheet that I'm creating and the spreadsheet that I've built and is available through this program is going to break down all the companies I'm looking at, define them by quality, and allow you to sort and filter based upon which quality companies you want to look at. In addition to this overall quality spreadsheet where it's going to list, what the name of the company is, what the stock ticker is, what quality level it is, and kind of the central reason why, you're also going to receive individual company quality reports. So for every company on this list that I've researched and put into this spreadsheet, I've also developed an individual quality report on that company's business model. So, if Apple is one of the companies, then it would be an Apple business quality report. And it would break down all the aspects of Apple that I think are the key defining characteristics on whether Apple is a low quality or a high quality business. Spoiler alert, Apple is on the higher quality end of the business spectrum. And there's a reason that they are the number one company by market cap in the world today in America. So when you think about this benefit, I've really targeted down on what I believe the first step is as a DIY investor that you need to kind of sort through. And what you're really wanting to do is to focus first on the highest quality businesses. Now, it's okay to not buy only high quality businesses. In my portfolio today, I own low quality and high quality businesses because sometimes it's hard to get a good deal on a high quality business, but it's easier to get a good deal on a low quality business. But that's really where this first quality investor $5 a month tier is set up as, to help you get through that first hurdle of understanding, are the businesses I'm looking at quality businesses or are they low quality businesses? So the second tier is what I'm calling an intrinsic value investor tier. And this is really the $10 a month tier. So again, about the price of a Netflix subscription, you can get access to my intrinsic value analysis that I've done. And this is really the second step that you would take in your own investing process. So again, I'm not providing you recommendations on what to buy or sell, but what I am doing is I'm providing you with my own research that I've done for myself. This is the research that I've been doing to make my own investments, and you're going to get to see inside and behind the fold on what I've been doing with my investments. And what I do is the first step, you define the quality of the company, but the second step is you need to determine the company's intrinsic value. And intrinsic value is really the value that you can receive from an investment just from the cash flows that the company is producing themselves. So if a company was to pay out all of its earnings to you as dividends, and you were to discount that value back to the present for all the way into the future. So if you had to buy a company and hold it forever, what is the value of doing so? How much are those dividends worth to you as an investor if you could never sell? And that's really what intrinsic value is. So the second thing you need to do after you determine whether a company is high quality, you need to determine what is the intrinsic value that I get out of owning this company. So if I buy Apple, how many dividends am I going to receive this year, next year, for the next 20 years, 30 years? That is going to be paid back to me as an investor. And what is that worth? How much return can I get for that? And what I've done is I've analyzed companies based upon a 10% discount rate. So if you want to earn 10% per year, the way intrinsic value works is this is the price at which you want to buy at or below to earn 10% on your investments every year without worrying about selling, but just for holding it. You should be able to earn 10% a year by buying below intrinsic value. And so, for instance, Apple is currently trading somewhere in the $170, $180 range per share. Well, if their intrinsic value is $150 per share, that means that if you were to buy Apple at $150 per share, then you could be, in this hypothetical example, then you could be sure that if your calculation is correct, you're going to receive a 10% return on your investments by making that investment at $150 a share or less. And there's also built in a discussion of discounts to intrinsic value. What you really want to be doing is buying less than that because you could always be wrong. Again, one of the number one assumption with intrinsic value calculations is that you could be wrong on your calculation. And so you need some sort of margin of safety and discount from that. So you ideally don't buy at 100% of intrinsic value. You might want to buy at 2/3 of intrinsic value. So if the intrinsic value for Apple is $150, and I'm not saying it is, but if it were $150, well, then 2/3 of $150 would be $100 per share. So ideally, you would then want to buy Apple at $100 per share because that gap of between $150 and $100 per share protects you from being wrong in your calculation. And so really, the first two steps I'm taking in my analysis in investments is I'm first determining the quality of a company, and then I'm determining the intrinsic value. And from that value, I determine whether a company should have a buy, hold, or sell rating in my analysis. And that's the spreadsheet that you'll gain access to as a $10 a month contributor into the membership program, is you would be able to see all the companies that I've established intrinsic values for set up in this spreadsheet, and you're going to be able to sort and filter for them based upon whether they're buy, hold, or sell, and you can sort based upon having the highest discount to intrinsic value. So the key usage here is you can then combine this with access to the quality spreadsheet, and you can select for the highest quality companies and search for the ones that also have high quality companies and have a buy rating. This is what I do on a regular basis when I'm making my own investments. So really there's two tiers above this that I think are very helpful. And these are what I'm calling the insider tiers. There's an insider access small cap tier at $25 a month, and there's an insider access full access at $50 a month. And what these are really doing is insider access. Is these are for the people that want to spend a little bit of extra money, but get full access, full insider look behind the scenes at my own portfolio. So if you're contributing $25 a month into the membership program, you'll get inside access to my personal portfolio where you can see every month what percentage of my investments are in a particular stock. You'll be able to see the percentage that I have, so the name of the company, the ticker, the percentage of my portfolio that is in that company. So if I own Apple, you'll be able to know whether I own 4% or 10% of Apple. You'll be able to know whether I own 0% of Apple, and you'll be able to see all the other companies that I own. I don't currently own Apple, FYI. I'm just using it as an example because it's one of the largest companies in the world. But you'll be able to start to know exactly what I own, at what price it, and what percentage of my portfolio that stock is. And this will be able to give you just that inside access of seeing how am I managing my own portfolio. And I hope that will benefit you in understanding how you can manage your own portfolio. The second thing that you get from that $25 a month insider small cap tier is that you'll get access to my personal notes and fundamental analysis on small cap stocks. Small cap stocks are stocks that have a total market cap, which is stock price times total number of shares outstanding, of $300 million to $1 billion. So these are relatively small companies. For instance, Apple is somewhere in the $800 or in the $900 billion range right now. But these are relatively small companies because it's $300 million to $1 billion range. And I like targeting small cap companies because they have a larger framework generally to grow. They're smaller companies, so you can grow from a small company to a much bigger company. And that avenue for future growth provides additional value and additional potential return in your investments. So I generally am providing all of my large and mid cap research and fundamental analysis online on the website. So these are my initial review notes. So if the company is bigger than $1 billion, I'm really trying to be open and say, hey, I looked at, I think most recently I've published on, which company did I check? Kraft Heinz. I published on Kraft Heinz recently, where I discussed, hey, Kraft Heinz is a company that I think is very interesting right now. The stock price has been dropping. It could be an interesting investment. And I talk about my reasons why. What this gives you access to is for the small cap companies that are a little bit smaller, that a lot of people don't necessarily know a lot about. I'll give you my own notes and research, which you can use as a starting point for understanding maybe some new opportunities that you haven't thought about. And then finally, this brings us to my final tier in there, which is really the $50 level, which is insider full access. And if you are contributing to this insider full access, my goal is to give you access to all the research I'm doing. So this is going to include not just the small cap research, but it's even the micro cap research. So the companies that are under $300 million. So you could have a $50 million company or a $25 million company or a $200 million company. These are really the smallest companies out there in the public markets. And what they do is if small caps offered you a long growth rate or long avenue for future growth, microcap companies offer an even bigger opportunity. And so I'll open up my personal research on microcap companies, what I'm doing, the notes I'm taking, and really dive into those details that you might not see otherwise. And I haven't been publishing as much about, but I think it's incredibly valuable as a learning and educational opportunity to see how I'm doing my investments. And then you can do something very similar. You'll be able to see the things I'm looking for, the questions I'm asking, and use that in your own process. So, but not only will you gain access to my microcap research as a insider full access contributor, you'll also gain 2 additional key benefits. So instead of just getting once a month updates on my personal portfolio allocations, you'll get short-term investment alerts. So when I make a change to my portfolio, instead of waiting till the end of the month and the beginning of the next month to know that a change has been made, I'm going to send out a short-term update to say, hey, I just bought 100 new shares of Apple, or I just sold my entire Apple stock at this price, and this is why I made that decision. And so these updates will be able to give you, a quick look that, hey, Trey's making a change to his DIY investing portfolio. Should I maybe look at what I'm doing? Is there maybe an opportunity here? And this will give you the closest inside access you'll be able to get. It's like you'd be sitting at the table with me doing when I'm making my investments. And the third, but really the key piece that's the main benefit here is that you'll get access to my buy thesis reports. So when I'm going to buy a company, both now and in the future, I'm going to write up approximately a one-pager, maybe a little longer, that's describing the reason that I'm choosing to buy an investment. And I think this is really key, both as a behavioral aspect for you to implement, but also as an ability to understand my own investing process, which I hope will help you learn to be a better investment yourself. Because what I'm going to do is I'm going to say, hey, this is the company, this is the price, this is the dates where I plan to buy it, or this is the prices that I am trying to buy it in, and this is why. This is what I think is going to happen in the future. This is what has happened in the past, and this is what I'm doing. And really, for me, it's a diary of my own investment journey. It's showing this is the decisions I'm making, and it'll be a public way of being transparent with you, the member, to say, hey, this is what I'm doing, this is why I'm doing it. And if I'm wrong, it's all out there on paper. It's all out there saying, hey, this is, you know what, I said this was what I thought was going to happen and I was wrong. But what it does as a behavioral benefit for me as the person writing it down is to say that I won't be able to fool myself that I made an investment for a different reason than I did. If I thought the stock price was going to go up 20% next year and it doesn't, well, then I was wrong. And my thesis needs to be readdressed. But if my focus was, say, on, I thought business was going to grow sales 5%, they grew sales 5%, but the stock price still dropped. Well, I was still right, even if the result didn't go the way I thought it was. So really, instead of focusing so much on stock price and just looking at the portfolio changes, what this will really be helpful for you is to see, how am I thinking about each of my individual investments? So again, this is really a kind of like a full access into my own investing process. If that is something that is interesting to you, if any part of these, if anything of these is interesting to you, then please consider becoming a patron in this membership program. You could do that on DIYinvesting.org/patron. My goal is to provide that extra little bit of value to really make sure that I'm giving you something in return for the financial support that you would be giving me for being my patron. These benefits are not designed as a transaction. I'm not trying to buy your money here, but I'm really trying to make sure that that we have a value exchange, that I'm able to give you value when you give me value, because I'm trying to give you value with this podcast for free every single time I sit down to do this podcast. But I hope to also give additional value by giving you insider access and insider insight into the research that I'm doing and into my own investing process. I hope that this exclusive access is something that is valuable to you. I don't know if it will be. I don't know if there's going to be any interest in this program. But what I really want to do is build an investing community of like-minded DIY investors who are interested in learning to be better investors and interested in sharing ideas on specific individual investments. Because well too often, what I saw when I was trying to learn is that people are willing to talk about strategies and tactics and basic investing concepts, but they're never willing to talk about what they're actually doing with their investments. They're never actually talking about the individual companies. How do I determine that this company is not going to go bankrupt? How is that story being told? How is this actual analysis happening? And I think that is the door that I want to open up to you, my listeners, that if you choose to support me in this journey, to support me in sharing what I'm doing, then I can provide you the additional value of just being as transparent as possible. And that's really what I want to do. I want to be transparent that, I am on a journey. I am in the process of learning myself how to be an even better investor. I think I have learned a lot over the years as it is, and I have a lot of value to provide. But I am constantly learning. I am constantly finding new information that I think will be helpful, and I'm going to share that with you. But I also want to be transparent and share the decisions I'm making, share my wins in my investments, and share my failures. And so I'm going to be publishing that content available as a membership benefit for those that choose to become patrons of this show. And it would really allow me to be, as I said at the very beginning, in true alignment on being a listener-supported show, that the listeners and the value I'm providing to you is being returned directly, and I don't have to go through a middleman about advertisements or some other method. So if any of that sounds beneficial to you, please consider becoming a patron. I would extremely appreciate any support that anyone chooses to give. Don't feel obligated at all to join. I'm going to continue to work to provide this free content and this free podcast, and I don't want you to join and be a patron if this money is going to prevent you from being successful in your journey. Please don't join my patron program if by doing so your individual investment goals and your individual financial success is harmed. That is not my goal. Keep the money for yourself. I don't need it. What I want to do is provide value if you find value from this content, if you find value from this additional transparency and insight. So please don't join for any reason for thinking that there's an obligation for you to join. I want to provide value to you, and that is what this is set up to do. It's given me a way to continue to produce the content that I do without bringing in some sort of third party that's going to mess up the conflict of interest. So that really breaks down what I wanted to share for you today in today's show. I know it's been quite a long show compared to my normal shows, and I appreciate any of you who have chosen to listen this whole podcast. I just want to end with a standard sort of investing disclaimer, just to remember that although I'm providing insight into my personal research process, investing process, and what I'm doing in my portfolio, I'm not making any sort of investment recommendations to you. And so I'm just going to read out this, my standard investing disclaimer, which you'll see on the patronage page and on other parts of this membership site. But this is to protect me in understanding that, I'm not doing this to tell you to buy certain investments, but I'm trying to do it as an educational service to show by showing my process. Hopefully you can benefit as well. So again, as a disclaimer, all investments involve risks, and any investment can result in a complete loss of capital. Always do your own research prior to purchasing an investment. I am not a financial advisor. I'm not a registered investment advisor, and I do not provide investment advice. None of the rewards, research, or other benefits from being a member or patron of DIY Investing's membership site should be construed as investment advice. I have not taken into account your personal financial situation in developing this content, and I shall not be held liable for any errors or omissions in the content provided on this website or in this podcast. All content is provided for informational and educational purposes only, and I, Trey Henniger, and DIYinvesting.org shall not be held liable for any investment decisions made from the use of the content provided via the DIYinvesting.org website. You can also read my full terms and conditions and terms of service for additional information, and that is on DIYinvesting.org's website. Again, thank you for listening to this content. If you'd like to become a patron and join my membership program, please go straight to DIYinvesting.org/patron. That's DIYinvesting.org/PATRON. Thank you very much, and I look forward to speaking with you again in the future.
Thank you for listening to the DIY Investing Podcast. Please visit our website and subscribe to our email list at DIYinvesting.org for guides, videos, and resources to help make you a better investor.
The DIY Investing Podcast is presented for general informational and entertainment purposes only. I have not considered your specific situation or risk profile, and I have not provided investment advice. The information presented on the DIY Investing Podcast should not be construed as investment advice. The views and opinions expressed on the DIY Investing Podcast are those of the participants and do not necessarily reflect those of the show's host or sponsors. DIY Investing, its producers, sponsors, and host, Trey Henniger, shall not be liable for losses resulting from investment decisions based upon information or viewpoints presented on the DIY Investing Podcast.